All right, let's dive into one of the most exciting, maybe one of the most dangerous times in the stock market. You know, that period when it feels like everybody's a winner, but the real question is, who actually gets to keep the prize?
I mean, seriously, just imagine that for a second. A time when it feels like you can do no wrong, when almost every investment you touch just seems to go up and up. Confidence is just absolutely soaring.
Yep, that's what we call a bull market. Simple name, right? But believe me, there is a lot more going on under the hood than you might think.
So let's dig into that mystery. Let's really try and understand what's going on when the market bulls start running wild. I'm sure you've heard this phrase a million times, right? You see it on the news, you read it in headlines, it gets thrown around constantly, and it always sounds like a really good thing.
But what's the real story? Is this the golden ticket, the perfect time to jump in with both feet? Or is it the exact moment you should be your absolute most careful? That's what we're going to figure out.
Okay, so first things first. Before we go any further, let's get a really clear, simple definition. What are we actually talking about here? So the key word here is period. This isn't just one good day or a good week. A bull market is a sustained time of upward momentum, investor demand is high, people are feeling confident, and it's usually all backed up by a strong, healthy economy. And hey, if you ever get it mixed up, here's a super easy way to remember it for good. Just picture a bull. How does it attack? It thrusts its horns up. So a bull market is a market that's going up. Simple.
Okay, so these massive runs don't just happen out of nowhere. There are some really powerful forces at play that set the stage for all of this to happen.
You see, it all feeds on itself. It's kind of like a domino effect. It starts with a strong, growing economy. That means companies are making great profits. When companies do well, guess what? They hire more people, so unemployment drops. And that is so important, because more people with jobs means more people spending money, which just fuels those company profits even more. All of this good news creates this incredibly optimistic mood, which gets amplified by all the positive headlines. It's a powerful cycle.
And when you put all that together, it creates this intoxicating feeling in the air. It just feels like you can't lose, like making money is easy. And that feeling, that's exactly where the danger starts to creep in.
Right. This is the big pivot. We have to talk about the psychological trap that catches so many people when everything on the surface looks perfect. And here is the absolute core of the problem. When every decision you make turns out to be right, because, well, everything is going up, it's incredibly easy to start thinking you're some kind of investing genius. But that's false confidence, and it can be a very, very expensive mistake.
This false confidence leads people to make some classic mistakes. You get this herd mentality, right? Everyone else is buying, so I should too. People start throwing money at stocks without doing any research, just because the price is moving up. They chase the latest hype. And that fear of missing out, FOMO, it becomes way more powerful than the fear of losing money. And that often leads them to buy right at the very top, just before things turn sour.
So if that's what not to do, what's the playbook for experienced investors? How do they handle these exciting but, pretty treacherous waters? Well, they stay disciplined while everyone else is getting emotional. They stick to their game plan. They're not chasing hype. Instead, they're focused on strong quality companies. The ones with real profits and solid leadership. And this is so crucial. They take some profits off the table as the market goes up. They aren't trying to perfectly time the peak. They're locking in their gains along the way up.
And here's the other thing smart investors never forget. Markets move in cycles. For every bull, there's a bear waiting around the corner. A bear market is the total opposite. Prices are falling, pessimism is everywhere. Just remembering that a bull market can't last forever is one of the keys to making smart decisions.
Okay, let's wrap this all up with a really powerful analogy that I think perfectly captures both the amazing opportunity and the hidden danger of a bull market.
I'm sure you've probably heard this saying before. It paints this perfect picture of a huge natural force that just brings everything up with it.
And you know what? It's true. When the market is in a really strong uptrend, it tends to pull almost every stock up with it, the great companies and the not-so-great ones. It makes everything look good on the surface.
But here's the twist. And this is the real lesson. Sure, a rising tide might lift a leaky boat for a little while, but sooner or later, that fundamental weakness is going to show. The second that tide starts to go out, that boat with holes in it is going to sink, fast. And it's the exact same for a weak company or a bad investment.
So here's the bottom line. A bull market is a massive, massive opportunity to build real wealth. But that wealth is for the people who stay smart, who stay disciplined, not for those who just blindly follow the crowd right off a cliff.
So, I'll leave you with this question to think about. Now that you understand both the opportunity and the trap,
Where does your own gut instinct land? Are you more excited or are you more cautious? It's definitely something to chew on before the next big bull run kicks off.